Welcome to Odds and Ends with Rob Friesen and Dave Singh. This is a StockOdds podcast to help you get centered on the week ahead. Good evening, Rob. How's everything?
Not bad. Thankful for a long weekend. Got somewhat caught up, not completely, but a lot of things to take care of. So here we are going into a shortened week. What do you have for us with the groups, and what are you thinking regarding this week here, my friend?
Yeah, I mean, we've just come off of mid-month seasonality, and we're still kind of continuing into that. And in terms of the almanac, we have things to look forward to, like the third Friday of the month coming up on Friday. And it's a little bit early to think about the end of the month, but we're still in that mid-month seasonality, headed towards that third month. So I pulled up some stuff and from this almanac to go over. Futures are pretty flat right now. We're just slightly up on the Dow. The Nasdaq's lingering a bit, and the Russell's probably the best of the four horsemen, right? So we don't have too much to report in terms of the futures coming into today. But if we look at mid-month seasonality, still that things like QQQ and XLK and gold, they're expected to do good mid-month, and we might get some traction still from that coming in the next day or two ahead. But I did pull up some stuff come later in the week. This is a shortened week, so of the 4 days, we're going to approach that Friday before we know it, and it's the third Friday of the month seasonality. And a couple sectors that were noteworthy are oil and biotech, things like USO, XLE, XOP. These are expected to be the best sectors on that third Friday of the month, followed by IBB and XBI. So a little bit stronger in energy and biotech. And that follows the trends that we've been seeing in the last couple weeks. I mean, over the last month, over the last week, over the last day, energy has been the leader. So that doesn't surprise me that could be one of the stronger groups come this Friday. And then things like individual stocks like Schlumberger, Halliburton. These are some of the ones that popped up in this web screener. And some underperformers are things like AMD, American Express, Tesla. So your bigger mega cap growth and chips and financials might be weaker based on the almanac. And again, XLE, XOP, these look to be strong. So those are just some noteworthy things we could see for the week ahead. What do you see on your take, Rob?
So we finished the week on Friday with things like Microsoft up 1.77%, and Tesla up 1.75%, Facebook or Meta up 1.66%, Nvidia up 1.38%, Intel up 1.38%, CRM up 1.14%, now up 1.87%. So there was sort of this finish to the week with tech looking a bit stronger, but when we look at the Nasdaq 100 futures, they are weaker than the other three. We're looking at the Fed having to, be more aggressive on the actions, the bond actions. So it doesn't bode super well for the Nasdaq 100 at this point. And then I look at the VIX versus VXN. So the VIX and the VXN are both indicative of volatility, but the VXN is specifically the Nasdaq 100, and it's the VIX is at a discount to the VXN. So volatility is higher. So you kind of have to, like, people might take a look at Friday's action and go, well, we're on the comeback tour for these stocks. So come out of the gate on Tuesday morning and just buy them. But they could be surprised that because of the volatility, it can swing both ways. And I'm kind of leaning more to, again, staying with the value proposition, and a little bit less on the growth proposition right now. I feel safer and more secure, more anchored in the value proposition at the moment. I mean, there's still tremendous speculation in terms of, what the Fed's going to do, how they're going to act. We've heard everything from 3 hikes to 7, to when does it actually start? And then we have people saying, hey, maybe they should do a half a point, hikes just for shock and awe, and kind of get the party started. So there's a lot of banter, and it doesn't really bode well. But here's the thing. There are studies out on the years that we've had interest rate cuts and how the market's done versus interest rate hikes and how the market's done. And so you kind of have an argument for interest rate hikes. The market can do very well because, I mean, the reason for the hikes is to cool a hot economy. So see what I'm saying? Like the cart before the horse. The economy is actually, robust, and the hikes come into play to cool it down a bit, to knock back inflation, blah blah blah. So I'm not going to pretend to be an analyst here. I'm just going to say there's a lot of banter on all these subjects, and even on both sides. And so that sort of lends itself to a little bit more volatility because of the confusion and the fact that, not all big market players line up on the same side here. So now we did have oil finish really strong on Friday, and earlier in the week I didn't mind being short some oil. So we need to take a little bit deeper look into the macro on the oil side to see if we can continue to be long that group or we're comfortable shorting it. As far as the REITs, real estate, industrials, don't really have a problem being short those guys. But I'd like to find, some of the value nuggets still within all the groups. I'll probably lean to diversification with some of the high PE, tech stocks short, some of the high PE biotech short. That's kind of where I'm leaning. Yeah. Financials. We had a bit of a bad spell there because of earnings for JP Morgan and Bank. Ultimately, I think those can bounce back with the interest rate prospects, like Wells Fargo.
The 10-year right now is up to 1.825. So I think that's also weighing on the Nasdaq this evening. But I mean, that's going to help. That may help with that rebound from last week in financials.
Yeah. What do you think about, some of these financials? JP Morgan, Bank were down quite a bit. Wells Fargo was up, Schwab was up, Morgan Stanley was down, Goldman Sachs was down on Friday. But I'd definitely be looking for those that got knocked down to spring back with the interest rate thing. So
best to breed company like JP Morgan down 6% or more.
Well, it'd be real ideal is if we could get a discount open on it tomorrow morning. I mean, it'd be like down and then down again. You might get a nice bounce back. I think at least your risk would be fairly mitigated having a nice down open. The worst thing would be it opens up and then starts going down again, right?
I'll do some pairs within financials.
Yeah. So I'm kind of with you on this. I think that it feels like a little bit like no man's land, but we're still in the mid-month seasonality. So some of those same names that were favored for that time are probably still in play. And then looking out to Friday, you can look at the almanac and see what is typically strong and weak on the Friday. There's a little bit more merit to that than any other day because it is expiration. So the stocks that are, largely option related and institutional, they're going to have a particular seasonality to January. So there's going to be that ability for them to behave similarly as they have behaved other Januaries. So I would add a little bit of weight for the Friday expiration for seasonality, right?
Mm-hmm. Good.
And also you've got, tax loss selling, things like that. There's certain types of stocks that people like to grab in January, and that may be where the Russell's kicking in a little bit right now. We may find that that's stronger than the Nasdaq 100 tomorrow, right? The Russell outperforms. It's very possible.
I'm looking at some of the individual stocks for mid-month seasonality, and some of the symbols in the ARK funds are popping up. EDIT, EDIT, EXAS. So it seems like some of these, again, high PE biotechs, the ARK kind of fund symbols are good shorts as well.
You know what I might do? I might run a pre-screen for like the S&P 500, and then run a pre-screen for the Nasdaq 100, and then put them into StockOdds. But I might do the same thing for the Russell, and then just sort of pick off some of the cream of the crop of the Russell, and kind of put that into the mix tomorrow, just so I have a little bit of those types of things. But again, I don't want to just screen on the Russell 2000 overall and say, do too many stocks. I'd like to be more selective.
Would you do the Russell stocks for the short side as well, or just on the long side? No, I don't see a point to that really. I mean, we might as well stay with the, S&P 1500, 500, 1500, or even the 100 are the pretty rich valuations, and the Nasdaq 100, and then try to find within the S&P 100, 500, and 1500 some of the nuggets that are value orientated, and then maybe be picking off a few Russell stuff just to capture that sort of appetite for returning to picking stuff from whatever happened with, like, I just look at how the Russell should have performed better in November, December, and it didn't. So I think some people dumped a lot of good stuff too, and they could be coming back in to buy some of that opportunity stocks. So, but I have to be selective. I don't know. I haven't done the screening yet. I have to do it later. So, but we'll be ready for tomorrow. But that's the overall theme: is diversification, paying particular attention to the oil complex for exposure, and not wanting to be in tech stocks long that are really rich valuations, still on the decline in that area. Looking to pick up some nuggets in the financials perhaps, and across the board, don't have a problem long or short industrials, long or short healthcare, except I'd probably lean more to short healthcare in general. Yeah. Well, looks like a good strategy.
I know it's tough, right? I mean, this is tough to talk about until you start to kind of roll in up your sleeves and dig in, and say, okay, what's coming up in the screens, right? So you could start by doing a generic screen, just say, okay, let's see what the odds have to say long and short. Okay, and just look at it. What is it bringing up? Okay, that's just based on performance or the subsequent performance expected after an indicator, after a signal, like standard deviation, like relative strength, like stochastics, or whatever you want to do. And you could just look at that and say, what does it bring up? Okay. Then you could go a different way, and that is, let's screen for some valuations and take the ones with the lower PE, maybe lower debt, and put them into StockOdds and see which ones pop up as really good complementary buys. That way you have the statistics and the fundamentals. Do the same thing on the short side, right? find rich valuations, pop them in. Now you're looking for shorts. So now you've got your combination of valuations that are lofty, and technically or statistically you should be short. Okay, so let's give it a run, see what happens, and again, remember to take a snapshot of the market each day, so you kind of get this continuity going. It's really hard if you have to step away from the market, like you go on vacation or you have some things you got to do. You can't trade for a while, and you lose that sort of day-to-day continuity. Right? Got to take that snapshot every day and say, what just happened? Where's the emphasis? And then there's two main thoughts. One, do we look for continuation of that theme that we just see, or do we look for some mean reversion? So for example, you could come in tomorrow and Facebook, Tesla, Nvidia, CRM, Qualcomm, they could all be down, right? Because they were up on Friday. So they could all be down Tuesday, just this performance mean reversion that goes on. So that's the trickiest part is do we press continuation or do we look for reversals? And I don't think there's an easy answer. I think it's time in the seat, it's tracking things, it's using the data that you have available, and statistics are definitely one part of it. And statistics, are really great when it's noisy, like noisy markets, confusion, back and forth, volatility, things like that, right?
All right, sounds good. Well, good luck.
All right, well, thanks for your time, and have good trading tomorrow, and we'll catch you later.
Same to you. Thanks.